Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, what does the state of the job market tell us about the economy and Canada's massive infrastructure gap and the opportunity it represents? Plus, to build a thriving biotech industry, you need some big anchors. That's all ahead. First, for the week that was in business, it's time for the briefs. The labor market expanded again in November, adding to gains in the previous 2 months. The report comes after recent signals from the economy delivered a mixed message. While exports showed strength thanks to energy, business and consumer spending was weak in November. On balance, the economy has weathered the trade storm better than many predicted, but the jobs market in trade-exposed sectors has been soft. Algoma Steel says it will lay off 1,000 workers by March of next year as it continues to struggle with the effects of U.S. tariffs. The steel company is transitioning its operations to electric arc furnace production. Layoffs were expected eventually. Algoma has received $500 million in government loans and said it will use those funds to transition to new markets. Quebec-based Laurentian Bank of Canada is selling itself in two parts: the retail and small banking and business acquired by National Bank of Canada, and the commercial lending and public shares going to Fairstone Bank. It values Laurentian at $1.9 billion. It's the third of four smaller banks in Canada to be acquired in the past 3 years, leaving only Equitable Bank as the remaining smaller bank in the market. Speaking of Equitable Bank, this week it acquired PC Financial for $800 million, giving it new heft in the marketplace and giving its customers access to PC's credit card platform and vice versa. Loblaws will retain a minority stake in PC Financial. The founder of Dell Computers, Michael Dell, and his wife Susan this week said they would donate $6.25 billion to fund the so-called Trump accounts in America, a deposit of $250 for 25 million children. It's one of the largest direct philanthropic gifts in history. The accounts are intended as investment vehicles, although it is not clear yet how they would function. Air Transat pilots have voted to approve a strike that could come as soon as next week. Negotiations with the 700 pilots have been going on for weeks. Air Transat is also facing pressure from its second-largest investor. Pierre Pelado is demanding a board shakeup and strategic review. And those are your business briefs. With the broad economy sending some mixed signals, what is the job market telling us about its resilience? Brendan Bernard is senior economist at Indeed.com. Brendan, great to have you with us.
Thanks for having me.
So people, of course, probably care most about this in terms of, what's happening in the economy. We know there are pockets of weakness because of direct hits, steel, lumber. We've seen it happen, autos. Broadly, though, how would you characterize the market right now in terms of what you're seeing?
So a dynamic that's been pretty familiar over the past few years is Canada's low churn labor market. Slow hiring, which is impacting job seekers. So we see across industries, just the number of new jobs started every month has been noticeably below the sort of pre-pandemic norms. And this has impacted job seekers in a variety of circumstances. At the same time, though, unlike previous downturns when we've seen the unemployment rate spike, the rise in the Canadian unemployment rate over the past few years, it's been quite gradual. And that's because of the second side of the low churn economy coin, which is slow layoffs. Layoff rates, the number of workers losing their jobs each month has been pretty low as a share of the labor force. And so those two trends have kind of offset each other, creating what has been a sort of gradual but relatively gradual weakening, but on the stable side of the labor market that's gotten a bit weaker over the past few years, but one that hasn't dramatically shifted in a certain direction, including even in 2025 when we obviously face this trade hit.
Yeah, interesting. It's very Canadian, I guess, that would take our time. We think it through before we make any sudden moves. Brendan,
it's not just Canada. The U.S. as well also has had a low churn labor market over the past few years.
Okay, well, that's very good for workers, right? That adds stability to their prospects. It's not that long ago, Brendan, though, that we were talking about it really being kind of the labor market in the sense that workers had the upper hand because there were so many unfilled positions out there. I don't think we're looking at that anymore, and it certainly doesn't feel like that anymore.
No, it definitely hasn't been the case. And that low churn labor market, it's been good for some folks in the job market, but not all. It's really a dual track labor market. Those currently employed in stable career track jobs, they've been doing fairly well over the past few years. We've seen, for instance, wage growth actually outpace inflation pretty steadily, both in 2025 and 2024, clawing back those losses from the surge in inflation earlier in the recovery. And so, and those folks are also benefiting from pretty solid job security. It's the job seekers, though, who are struggling in this slow churn labor market, finding it tougher to find new roles. And a big part of that is just the cyclical shift in the job market from what was just a great market for job seekers coming out of the pandemic. We had job openings through the roof, really across the economy. It was really a macroeconomic phenomenon that just employers across different regions, across different sectors were looking to hire. That's not the case anymore. We've got many areas of the economy where demand is actually quite weak, weaker than it was pre-pandemic, and that's impacting job seekers across a variety of circumstances. The challenges among Canadian youth are well known. Their unemployment rate was above 14% recently. And we're also seeing challenges among employed job seekers. The rate of job hopping has also been quite low over the past few months, and really few years since that temporary tight labor market we saw post-pandemic. And so for folks comfortably employed, they're faring relatively well. It's those folks either trying to make a change or trying to jump back into new work who are finding it tougher.
So good to have you, Brendan. Really appreciate the update.
Yeah, thanks for having me.
Brendan Bernard is senior economist at Indeed.com. Coming up, we can't build housing in Canada without the infrastructure to support it. Stay with us. Welcome back. To build more homes, you need infrastructure. So how are we doing? Here's a look at the state of it by the numbers. The Canadian Infrastructure Council has produced the first national infrastructure assessment. The news isn't good. In 2022, 11% of the enabling infrastructure for housing was listed in poor or very poor condition, with a replacement cost of $126 billion. Waste and wastewater systems topped the list, with 11% of those assets in poor or very poor condition and a replacement cost of $107 billion. And a staggering amount of waste does happen. 17% of Canada's water gets wasted every year through leakage. 800 million litres. That's equivalent to a year of drinking water in the province of BC. Waste management systems are in slightly better shape, and the percentage of waste diverted from landfill has risen to 27% in 2022 from 21% in 2002. But landfill shortages are expected to be increasingly common. Public transit was in poor condition at a rate of 13% in 2022, with smaller cities faring worse than larger ones. That review of infrastructure comes from the first National Infrastructure Assessment. Peter Weltman is Vice Chair of the Canadian Infrastructure Council and a former Financial Accountability Officer for the province of Ontario. Peter, thanks for being with us.
Thanks for having me.
So let's start with whether you were surprised by what you found. I mean, the state of infrastructure is not great. Was that a shock to you?
Well, it was. You never know how bad it is. I guess it was a little bit of a shock as to how bad it was, and the disparity amongst the different communities and the regions was also quite striking.
Of course, one of the reasons that this report is important is if we're going to build houses, we need the infrastructure to support it. When we look at the gap, does that make you less confident that we can meet housing targets? In other words, we need to put the cart before the horse.
Well, I think it's important that people recognize, that we all recognize, you need the cart before the horse. People kind of like to have water coming out of their taps when they move into a house and turn on the tap. That's a pretty key component. So I think it's important for folks, and I think people do recognize that the infrastructure is needed to support the housing, and it needs to be there first.
You know, one of the other things, and I guess maybe we just kind of get inured to big numbers, but I was actually pleasantly surprised at the size of the expected cost to upgrade. It was lower than I would have thought, actually, Peter, but would you agree with that assessment?
Well, I think at the moment it's not too bad, but the key issue is we don't have enough data to really get into the details around specific costs and specific benefits from investment. And that's really what the purpose of a national infrastructure assessment is to provide advice to the government as to where is the most effective investment, where should the next dollar be spent.
And so I guess that leads to the obvious question of what do you hope happens with this report? Who should use it? How should it be used?
Well, I think anybody who touches on infrastructure, so builders, municipalities, communities, at least have an awareness of what the state of play is. So what do we have in the ground now? What their community could look like in 25 years from now, and what sort of infrastructure will be required to support what that community looks like in 25 years. And of course, how do we get there? What are the costs, and what are all the different things we need to do to coordinate to move us in that direction?
There obviously you broke it down into categories. Water, wastewater. I was actually shocked at the amount of waste and leakage in our system. When I look at that, if I were a municipality, I would consider that kind of a five-alarm fire. Did you see it the same way, that people should jump on this and actually fix what needs fixing?
Absolutely. And that's like the first recommendation. Make the most of what we have in the ground now, because that is the most cost-effective investment, the highest benefit, the highest return in the infrastructure space right now. And I was surprised. I mean, we remember the Calgary situation last year with the water leakage. I was surprised at how much per capita water usage there is in Canada, even in different regions relative to other parts of the world. Part of that can be explained by the fact that we have a vast country with lots and lots of stuff, and we're not as conscious of the fact that these things are finite resources.
And so if we're thinking about building housing, is it fixing existing infrastructure, or is it building new infrastructure, or is it a combination of both?
Well, and that's where an NIA comes in, and that's where you can drill down to a lower level. It's a combination of both. So typically a higher density housing area is going to be less expensive to service from an infrastructure point of view. Most of the infrastructure is already there. It's a matter of tweaking and adding and maybe making changes. If you're building brand new, low density suburbs further away from the city center, infrastructure has to be built to bring those services further out. And in fact, the property tax, the revenue, the fiscal situation doesn't allow a city to do that and break even. It's expensive to do that.
All right, we've got to leave it there, Peter. It's so good to have your time with us.
Sounds good. Thanks, Amanda.
Peter Weltman is Vice Chair of the Canadian Infrastructure Council. How we finance our infrastructure could also use some innovation. Ben Dachis is Vice President of Outreach and Research at Clean Prosperity. Ben, great to have you with us.
Thanks for having me on the show.
So there are big numbers and there are big needs here. Do we need to think about, because if you're a municipality, you don't have extra cash lying around to fix the stuff that's already under our feet. Where can we start to look for innovation when it comes to financing this?
Yeah, well, the headline issue, whether we're talking about water infrastructure or electricity infrastructure, which are the two main kinds of housing-related infrastructure that municipalities are involved in, is that the upfront cost is being fronted too much by home buyers and taxpayers, and that's what we fundamentally need to fix.
In other words, one of the things we've identified is that housing doesn't get built because the development costs are so high. This would actually help solve that. How do we go about that?
Exactly. So what municipalities, especially in Ontario, are doing, and we're seeing this to a larger extent now in places like British Columbia, is that they're relying on development charges to finance a lot of the new construction of water and wastewater in particular. And this has been a great deal for cities because they don't have to take up the debt. And what that just ends up being is debt that ends up in at the household level in their mortgages. So what we have to be thinking about is the debt's going to be taken out anyway. And so we need to be thinking about what's the right level at which we should be taking out this debt. Should we put onto the household through higher mortgage costs, or should we be putting it in at the municipal level, or even better, some sort of middle ground in which a municipality can still actually own the asset, but in perhaps a corporation that's owned by the municipal government that can take out debt without it being immediately a liability for taxpayers.
And how different is that than what happens now? If a municipality needs to invest in its infrastructure, it doesn't have the options to do that right now?
It does, but it's part of a political process where when you have water as a line item department, when it's up against parks and roads, what you see is less of a focus on what that water system needs. And so by creating a corporation where a board of directors and the governance is focused just on the water system, just what they need, we're going to see more growth. And that's modeled on a system that we have in place here in Ontario in pretty much every municipality, or at least the large ones, of electricity distribution. It's a good model. It's led to growth. And now we're in a position where we should be thinking about that for water. And now electricity has been growing, and now electricity needs to grow a lot too. and those corporations are well positioned to potentially grow, but with some financing changes there too.
And then go solicit investment. So we would have very specific, presumably municipal bonds related to these assets?
Exactly. You can get more debt, and you can do it in a way in which you think about a household. If you're a household, you don't think about the entire upfront cost of a home in terms of what you buy. You think about your monthly cost, your regular mortgage payment. That's not how cities are thinking. They're thinking about the big upfront cost of infrastructure. And what we need to do is rethinking that in terms of what's the right mix of how we finance it upfront, which is a little bit, and finance it with debt, which is a little bit too. We want to find that happy medium. And we're just not there in the municipal finance world, especially for water and wastewater.
And we're definitely going to have to get there. Ben, great to have you with us for this. Appreciate it.
Thanks for having me on.
Ben Dachis is Vice President of Research and Outreach at Clean Prosperity. Coming up, how Canada can build its biotech strength. Stay with us. Canada has a solid showing in health sciences and biotech when it comes to innovation and startups, but how can we turn that into a mature and thriving sector? This week on the Wonk podcast, I spoke with Gordon McCauley, President and CEO of Admare, which supports the sector, and started by asking how we can do better at turning early-stage leads into mature companies.
The short story is we've done a lousy job of translating that basic research infrastructure, raw material that you're describing, into a sustainable life sciences industry. That said, we have an extraordinary group of emerging companies. And frankly, that's a bit of a challenge in this industry anyway, because by definition, the further a new product gets in the development life cycle, the more likely it is going to be acquired by a global player. However, one of the things we know for sure, it's 100% clear in the business literature, is that without anchor companies, we will not have a self-sustaining life sciences industry. This is basic Michael Porter stuff, and it's very, very clear. And in fact, when you look at Porter's original work, he talked about Genzyme, one of the cornerstones of the life sciences cluster in Boston, as an example of that. So one of the things that we need to do is to build those anchor companies. And you know what? We've had them before, right? If you look in Vancouver, QLT was a classic example. You look in Montreal, Biochem Pharma is a classic example. And it is the case today still. And we are investors in early stage companies. Every single company in Vancouver or Montreal is 1, maybe 2 degrees of separation away from QLT or Biochem, just proving Porter's theory about anchor companies.
And I asked Admare's Gordon McCauley if we are capitalizing on a flight of human capital from places like the U.S.
I think we are doing some really important things. Again, to give credit, in the budget, there was a specific program around attracting some of those scientists. I think specific places, U of T in particular, has done a great job of saying there's a specific number of scientists we want, and we're putting capital there to attract them. And they've attracted some monster names. I mean, they're really high profile folks. One of the things I worry about, however, is the entrepreneurial talent. So, again, we're in the business of creating companies. And one of our challenges is always finding the talent that can drive those companies forward. And we run this executive program that's been incredibly successful, we're really proud of. But at the end of the day, we've got to find those people. One of the things I would love for the government of Canada to get behind is kind of a North Star program of repatriating Canadian entrepreneurs who have found success in the U.S. and in our industry, typically that's Boston or San Fran. But given what's going on in the world, they want to come home. And to be clear, that's not some brilliant idea we sat around and came up with in the pub one night. We know that's possible because we've had outreach from entrepreneurs in those places who've said to us, look, we hear you're the people we should talk to about creating a company in Canada. To be fair, it's really complicated to do. I mean, just from a tax alone or tax basis alone, to think about doing that is complicated. But at the end of the day, that would also have the same kind of impact that attracting the researchers will absolutely have.
I also asked McCauley how we can do better at using health data to our advantage in the growing biotech sector here.
I think there is a sense of urgency, but let's start with the opportunity. I mean, first of all, 30% of the world's data is health data. There is an extraordinary opportunity to find ways of creating value, and I think the Public Policy Forum recently wrote on this. It's something like 110 or 115 billion dollars of value where there's potential to unlock there. And obviously, in life sciences data, you have to be very careful and thoughtful about protections. I would argue that's probably true of all data, but at the end of the day, there is a real opportunity, and there's an opportunity to use that data to advance human health and to advance knowledge in the space. So I absolutely think there's an opportunity. Again, there's a bit of an infrastructure issue here. There's a bit of a gold rush happening with data centers, obviously, and that's something that I think Canada needs to get behind very aggressively. And again, I think the last couple of months have been fairly encouraging on that front, but there is a huge opportunity that's waiting there for sure.
That was some of my conversation with Gordon McCauley, President and CEO of Admare, on this week's Wonk podcast. Time for the takeaway and where good intentions get you. The recent memorandum of understanding between the province of Alberta and the federal government has been hailed as an important step in reclaiming a relationship that in recent years has been badly stressed. The intention seems clear. In exchange for some concessions by Alberta on meeting carbon pricing commitments, the feds will throw their support behind big energy projects. And front and center on the list of big energy projects is a new pipeline to satisfy the long-held desire to ship a higher volume of Alberta's abundant oil to markets, especially markets in Asia. Anyone with a vague recollection of the Northern Gateway debate might be feeling a vague sense of unease right now. That was the pipeline Enbridge tried to build 15 years ago after an MOU opened the door to the concept. What followed was years of pushback from First Nations, environmentalists, and ultimately from governments who read the room of public opinion. Is the MOU signed last week any different? Times have changed, yes, and in general, the spirit in Canada is tilted back towards a view that we should capitalize on our resources rather than apologize for them. But for the private capital the federal government insists must be along for any pipeline ride, that history represents a very real risk. Attitudes around the sector and its exports were also pretty positive in 2010 when Gateway was being debated, and even then, concerns about the pristine and complex environment of BC's North Coast proved insurmountable. Might the federal government overrule a tanker ban unofficially in place since the 1970s? Maybe, but it seems more likely that interests will be redirected towards expanding existing southern BC routes. That might be a more practical approach if less ambitious. My takeaway? There was a lot of symbolism in the warmed-up tone between Alberta and the feds. It remains to be seen if it was only symbolism. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.